Hello, everyone. Welcome to the Financial Information Channel. Today, we will talk about the concept of marginal utility, also known as diminishing marginal utility. We will explain this with examples to ensure you understand it well. Once you grasp the concept, we are confident that you can apply it to your life and make more informed decisions when shopping, thereby maximizing your happiness in purchasing. The economic theory of marginal utility shows the level of satisfaction you would get from purchasing a single product. It also indicates the additional utility you would get for each extra unit of that product. This additional utility decreases with each additional unit of the same product, a concept known as diminishing marginal utility. For example, let's say you achieve a satisfaction level of 100 when you buy a shirt, so your marginal utility is 100. According to this theory, when you buy an extra shirt, the satisfaction you get decreases to 80, so the marginal utility of the second shirt is 80. By buying two shirts, you would reach a total satisfaction level of 180. Let's illustrate this with a table. In the table, you see the example of pants and shirts. Let's consider our friend who has these levels of satisfaction and is going to buy 4 items. Firstly, he would buy one shirt because it provides 100 marginal utility, which is greater than the 90 marginal utility provided by the pants. Looking at the second item, if he buys another shirt, it would give him 80 marginal utility. However, buying the first pair of pants would give him 90 marginal utility. So, let's buy one pair of pants. Now, it seems that buying the second shirt would give him more satisfaction than buying the second pair of pants because it provides 80 additional utility, which is greater than 75. When buying our last item, we see that the marginal utility of the third shirt is still higher than that of the second pair of pants, so we buy another shirt. In this way, we end up buying 3 shirts and 1 pair of pants. Now let's add a price to this table. Let's say the shirt costs $4 and the pants cost $5. Now we are closer to a real shopping scenario. In such a situation, to find the marginal utility, we divide the marginal utility by the price. In this case, our first 3 purchase preferences will be shirts. Finally, we can buy 1 pair of pants. In this way, by buying 3 shirts and 1 pair of pants, we will reach the maximum satisfaction level. You can use this logic in your life in any way you want. You can reconsider your purchase preferences by assuming the shirt price is $10 and the pants price is $5, and write them in the comments section. We will like the correct comments. Tomorrow, we will upload a video where we discuss the financial perspective underlying the book Rich Dad, Poor Dad. You can find our content on both YouTube and Instagram, which will increase your financial IQ, provide you with new economic knowledge, and help you make more informed investment decisions. Follow us on both social media platforms and don't miss any of our content. Don't forget to like the video and leave comments, whether positive or negative. Thank you for watching. See you in the next videos.